4 o'clock in Singapore, right? And we are beginning the Q3 2022 update. Hi, I'm Shira Zimmerman, Investor Relations Manager for the Trendlines Group. With me today are Steve Rhodes and Todd Dollinger, Chairs and Chief Executive Officers at the Trendlines Group, and Chaim Brosh, Trendlines CFO, who will present business updates and a financial review for the first half of 2022, plans for 2023, and answer questions at the end. To submit a question, use the question and answer function in the conference call. Okay, please note that this presentation may contain comments that constitute forward-looking statements which involve risks and uncertainties. Examples of forward-looking statements include descriptions regarding the intent, belief, or current expectations of the company or its officers with respect to future results of business operations and financial conditions, industry, environment, and future events and plans of the company. Such forward-looking statements are not guarantees of future results, performance, or achievements. Actual results, performance, or achievements of the company may differ from those expressed in the forward-looking statements as a result of various factors, such as known and unknown risks and uncertainties and assumptions, including those risk factors discussed in Trendline's offer document dated 16 November 2015, and in the company's filings on the SGX net, which you are encouraged to review. By their nature, forward-looking statements involve risks and uncertainties because they relate to events and depend on circumstances that may or may not occur in the future. In the light of these risks and uncertainties, actual events, results, and developments could differ materially from those expressed or implied by the forward-looking statements. The statements represent the company's or its officers' views only as of the date they are made and should not be relied upon as representing the company's or its officers' views as of any subsequent date. The company does not assume any obligation to update any forward-looking statements. Finally, please note all monetary values cited are in US dollars unless otherwise specified. These are the topics we'll be covering today. As part of our portfolio update, we'll also be hosting Khalim Joubran, CEO of Betalon, who will give us a short overview on his company. I will now turn the presentation over to Todd Dollinger, Chair and CEO of the Trendlines Group.
Thanks, Shira. Focusing on our portfolio companies, and despite the uncertain situation of the world markets, many of our companies have reported business achievements during the course of this year. These achievements reflect a maturing portfolio with follow-on capital successfully raised by numerous companies, often with larger raises and higher valuations. Achievement of significant milestones is, we believe, a marker for exits to come. As it's a challenge for investors to review all of the companies that are in our portfolio at any given moment, we urge you to take note of the achievements of the mature companies that are ramping up and achieving significant milestones. It's the sum of these amazing stories that we believe to be the true value of Trendlines. With the challenging market atmosphere, several of our companies, in spite of this, have completed recent raises, including some for substantial amounts, again, indicative of a maturing portfolio. In these first 3 quarters of this year, 30 of our portfolio companies have actually raised a total of more than $34 million. Following last year's announcement by Benzica that it entered into a strategic license and collaboration agreement with the German pharmaceutical company Merz for the delivery of Merz's generic Botox into the bladder wall using Benzica's innovative needleless ultrasound-assisted delivery catheter, Benzica completed a $19 million round with the participation of Merz, the urology medical device company Laborie, Trendlines, venture capital investors, and more. Betalon, just referred to by Shira a moment ago, is producing natural food colors via biological fermentation and employing sustainable processes. They announced a $14.5 million round led by DMS Ventures, the investment arm of the food giant DMS. We'll hear more from the CEO of the company shortly. Our companies Setbone and Arcuro were among the companies that also closed fundraisings so far this year. And although it doesn't appear on this slide, our Singapore Agri-Food Fund's portfolio company, Equinome, recently raised $35 million at a substantial increase in value. Our fund's portfolio companies have raised more than $50 million during the course of this year. Meanwhile, Escala Medical has announced FDA clearance, paving way for entry into the US market for its non-surgical solution for pelvic organ prolapse, POP disorder, And at the same time, Limaca Medical received FDA breakthrough device designation status for its precision endoscopic biopsy product. Both companies are in the process of fundraising now, again, meaningful rounds for these companies. Some 7 of our companies this year have launched clinical or field trials to advance their regulatory and commercial goals. And every clinical trial brings our companies closer to increased valuations, sales, and potential exits. Let's take a quick look at some of the companies again. We're going to spend a few minutes highlighting some of these companies. First of all, we're going to go and talk about Fitolan. I mentioned Fitolan, and now I'm going to introduce you to our CEO, Dr. Khalim Joubran, Fitolan CEO. He's going to give an in-person overview of what Fitolan does. And Khalim, over to you.
Thank you, Todd. Hi, everybody. Hi, Chaim, Steve, and everybody else. So thank you for this opportunity to present Fitolan today. We are really proud to be presented always as a kind of progressing company. We just spoke in the EIT Food Summit in Portugal a few weeks ago. We were presented there as a success story. They invested in the company 2 years ago, and they wanted to represent an example of a company that started as a small startup exploring itself in the market that is now already working with the industry. And following what you mentioned, Todd, and what you wrote, Shira, in the presentation about Fitolan having strategic collaboration, this is actually the highlight of this period at Fitolan. As you all remember, we produce natural food colors to the food industry. We solve a very old problem to the food industry, as until a few years ago, most of the food colors in market were synthetic, raising a lot of health concerns. Natural food colors that are currently offered to the market are unfortunately not enough, and they are not sufficient in terms of cost and quality. The industry is not pleased of the natural food colors that is served to the market today. We come to change that following the technology that was licensed to us, with the help of Trendlines, of course, from the Weizmann Institute of Science. We have been operating for 4 years developing this technology, and in the last 2 years, we have been heavily involved in pilots and communication with potential clients. And recently, the investment round that we have closed 4 months ago was led actually by DSM Venturing. DSM Venturing is the venturing arm of DSM company, which is I think the second biggest ingredient company in the world. This was achieved after a few successful pilots at Nestle Ice Cream, PepsiCo, and more companies. And earlier this year, we have also signed an R&D collaboration agreement with Ginkgo Bioworks, the biggest biotech company in the United States, that is operating also in the food industry and in the biotech industry. Ginkgo are actually Fitolan's partners right now. They made an in-kind investment in Fitolan. We have closed $14.5 million. Right now, we are finalizing the commercial agreement with DSM Business. It will be a distribution agreement in which DSM will distribute Fitolan's products to the food industry, not exclusively, but they will have a great share of the distribution rights of Fitolan products. Fitolan also works independently, of course, of DSM, and this is a great position to be at right now. The current challenge that we have is to go through the regulation in a fast manner. That's why this is how the funds are used. We are submitting in the current quarter, we are submitting our petition to the FDA, hopefully to be able to sell already in 2023 or early in 2024 in the US. I'll be glad to answer any question that you have, guys.
Thank you, Halim. I think that today we will skip the questions, but if anyone is interested in finding out more about Phytolon, I would invite you to go to the company's website. You can find it either by just Googling Phytolon or by going to the Trendlines website to our portfolio page, looking at the Phytolon page there and linking through to the company's website.
Yeah, here is Steve. If I have just 30 more seconds, I would like to join you and also invite you guys to come to Yokneam, to our facility and site. We have a few labs and offices here, 23 people in the team, and I would like to here mention the great contribution of Trendlines and of CBG to all our funding rounds, including the last one in these difficult times in which it's not easy to raise, but together we have managed to engage top class entities like DSM, like Kibus, which are ADM Ventures, EIT, Ginkgo, with the help of Trendlines and Consensus, who also invested in this round. So this is important to mention in this forum. Thank you.
Thanks, Halim.
Thanks,
It's really exciting what Phytolon is doing. Artificial food colors are used all throughout the food industry, and yet they're very unhealthy. Some of them are even carcinogenic. Phytolon, by developing natural food colors that are going to be affordable, safe, high quality, and without the agriculture that's necessary to grow typically thousands of acres of, say, beets for red color, is going to have a much more sustainable, much safer, much healthier solution. And we really appreciate everything that Phytolon is doing. Thanks, Halim.
Thanks, Halim.
Thank you all. Bye-bye.
It's always great to hear from our CEOs in person, and we will look to have further opportunities in the future to present to our shareholders some of our companies. The passion that they have and the drive to succeed are just amazing, and it's something that we see on a daily basis, and we'd love to share more of it with our shareholders. Through our monthly updates and our newsletter, we regularly publish information about companies that have achieved meaningful milestones, and we hope that all of you will take a look at that information and at our website in order to get information about our portfolio companies. In 2022, we've had a number of achievements by our agri-food portfolio companies that we're particularly proud of, and we want to give you a sample of that progress. We'll look at 4 outstanding food companies, agri-food companies that have made significant progress this year, and they represent the high caliber companies in our portfolio. All 4 of these companies have completed investment rounds to expand their capabilities, and all have strategic collaborations with multinational corporations already signed or in the offing. As you just heard from Halim, Phytolon announced the completion of a $14.5 million round, a remarkable achievement for such a young company. Phytolon has captured the attention of industry leaders as well as VC funding, and as Halim mentioned, the company has a strategic partnership with both DSM Food as well as with Ginkgo Bioworks. Our company FruitSpec raised $5 million last year from venture investors and has recently broadened its sales base, expanded its sales, and in July of this year launched a new product which had immediate uptake from the market and is selling in tremendous quantities for a brand new product in the marketplace. The company is going to have a very significant impact on the food supply chain. Our company MeadowMotion raised a significant amount of capital last year from a strategic investor from the Netherlands, The company's robot for harvesting and doing other functions in greenhouses is coming to market early in 2023. And we're very excited about the prospects for MetaMotion. AgriScout is an AI company employing artificial intelligence analytics for user-generated data acquisition in the crop management space, providing the level information down to the level of the individual plant about diseases and pests. The company has continued widening its customer base with AECI, a leading agri-tech distributor in Africa, with a large project in Indonesia with a major cocoa grower, and with one of the largest food companies in the world with whom they signed recently a global agreement. Viaqua is an aquaculture company poised to launch its first product next year and is expanding its pipeline by adding additional diseases and new species. The company has oral delivery of vaccines and feed supplements to prevent the onset of diseases in shrimp, fish, and other animals. One of our cooperation partners is Barramundi Asia in Singapore, where we are launching a project to develop a treatment to prevent diseases in Barramundi. These companies just represent a small bite of our 26 agri-food companies.
Thanks, Steve. We're going to talk a little bit about some of the medtech companies now, really just to fill out the portfolio story for today. We already mentioned Benzica, which is heading into its next clinical round. And this is following completion of a substantial investment that was made into the company earlier this year. And as we noted, they have two major strategic partners in the company, the German pharmaceutical company, and as well Laborie, the Canadian, European, fast-growing medical device company in the urology field. But let's talk about a few of the other companies. Arcuro has both FDA and CE clearance. Their real push right now is toward the US market, but they've also launched sales in Latin America. So in addition to the critical FDA clearance and CE mark, they also have clearance to market in a number of the countries of Latin America and elsewhere. They're working with some of the most important key opinion leaders in sports medicine, and they're marketing their meniscus repair device as what is the clearly superior device for faster, easier, more successful surgeries. Arcuro, under the guidance of CEO and founder Lee Renone and Chair Robert Bash, whom we are proud to have brought into Arcuro, as we often do with our companies, has really strengthened the team again with the appointment of Dr. Phil Davidson as medical director and chair of the company's scientific advisory board. Joining him is Dr. Ken Zaslav from New York. And these are both some key leaders in the sports medicine field. Look for great things with Arcuro in the year ahead. Similarly, ST Stent has FDA clearance and is starting to sell to key accounts and opinion leaders in the States. And as we did with Arcuro at ST Stent, we brought forward a chair for that company, a fellow by the name of Mike Berman, one of the leaders in the medical device industry, former president of Boston Scientific's cardiology division. And he's serving both as the company's chair and additionally as its commercial leader. Mike has decades of experience as a top medical device executive, and just having him with us clearly increases the value of ST Stent as he helps us bring this company forward into the market and on. Liberty is a very exciting company, very important company, because it allows for easy, safe home dialysis for the unfortunately fast-growing population of renal failure patients around the world. They've now launched their second clinical trial. We are happy to report very good results so far. And the company's working toward completing the regulatory process in the near future, and we hope we'll see it with FDA clearance before very long. Finally, in this small group of really some of our leading of our 35 healthcare companies is Escala. Escala Medical, mentioned previously also, provides a surgical solution, a non-surgical solution to pelvic organ prolapse. They received FDA clearance earlier this year. They've completed now a 17-patient first-in-human clinical study with 1-year follow-up. They're currently in process on a substantial round with a lead investor already signed on, and we'll be finishing out that round in the next month or two. And this is all for preparation for launch of the product in the US market and really getting us before the medical device community in the US. It's also worth noting that in the case of Escala and Arcuro, we're talking about companies that have women CEOs. This is very important to us at Trendlines, which is to encourage diversity, both in terms of the communities from which our people come from and also gender diversity throughout our portfolio companies and within Trendlines itself. And we're proud to have these very hardworking, very knowledgeable, very committed leaders in our companies. And with that, we're going to take a look at some of our key numbers. I'm going to turn things over to Chaim Brosh, our CFO, to talk about these metrics.
Thank you, Todd. In the last 15 years, the total portfolio value, including the cumulative exit proceeds, increased and reached $130 million as of the end of June 2022. It's important to note that this cumulative value does not include the value for consolidated Singapore portfolio companies. At the end of the first half of 2022, the fair value of Trendline's portfolio was $81.1 million compared to $83 million as of the end of December 31st, 2021, a 2.4% decrease in value. Since our IPO, our portfolio value, excluding contingent earnout, has almost doubled. The write-off of schematics adversely affected our portfolio value, but put the portfolio in much more balanced position moving forward. We expect a continued growth and strong performance ahead. As we have shared with you in the past, in the attached slide, you can see that upon exit, that the average exit value has been more than 4 times the book value prior to the exit. And this number is excluding any earnout or royalties deriving from those exits. Assuming past experience provides some indications of the future, the numbers present the potential for our future exits. In that touch slide, you can see an overview of few of our key financial metrics. Our portfolio value decreased slightly compared to December 2021, mainly due to the write-off of schematics, as previously noted. Our total equity decreased by 8.3 million, and our NAV per share decreased to 12 cents per share, US dollar cent, which is around 17 Singaporean cent per share, which is almost double our share price as of the end of trading yesterday. We reported a net loss for the first 6 months of the year of 11.9 million compared to a 4.1 million gain over the same period last year. The main reason for this loss is the write-off of the future expected proceed from the schematics exit, as we announced a few months ago and described just a minute ago. January 2022, we announced an agreement with a group of current and new investors to invest a total of $15 million in 8 quarterly tranches as per share price of 12 Singapore cent. To date, we have received the first 4 tranches investment as agreed and on timely manner. Back to you, Steve.
Thanks, Chaim. In late August, we received the Bronze Award for Best Managed Board in the small cap category of the Singapore Corporate Awards. We're proud to have received this recognition and are thankful to our very supportive board of directors for their active involvement in our corporate governance. This is not the first time that Trendlines has been recognized for outstanding corporate governance, and it reflects, I believe, our desire to run the company in the best possible way and in the most transparent way possible. In fact, we've also received awards in the past for our investor relations efforts, and we have regularly had these quarterly meetings with our shareholders in order to share as much information as we can with you. We also issue regular monthly reports to the market, and we try to be very, very transparent. Also in August, and related to governance, we were very pleased to announce that Professor Lo-Tek Seng, the former CEO of the Singapore National Research Foundation, has joined our board of directors, and we think that that's a great addition to strengthen our board. So welcome, Prof. Lo. After 2 years of running no events or only having virtual events, we were extremely happy to organize the AgriVest conference once again this year. 2022 marked our 10th anniversary of the conference, which was sold out a week before with over 850 attendees. In fact, the week before, we were all receiving calls from desperate people trying to get tickets, which unfortunately we didn't have. The conference garnered a lot of excitement and really showcased the Israeli agri-food system to some 300 overseas visitors who attended the conference, including many from Singapore. In the center here, you see Jolene from Nurasa, a Temasek subsidiary, who was one of our attendees and one of the speakers at the conference. Following on the heels of the AgriVest conference, just a few days later was the COP27 event, the United Nations Climate Change Summit, attended by over 35,000 people close by in Sharm el-Sheikh, Egypt. People came from all over the world, including some 100 heads of state, to discuss the critical issues facing our planet. We're very proud that our own Dr. Nitsa Kardish was invited to speak and moderate a panel focusing on the intersection between agriculture and the climate crisis. Nitsa was a speaker alongside a delegation of top people from Israel's agricultural sector. During 2022, and specifically in the past few months, we've been carefully reviewing our strategy and focus. And as is stated in our press release that was issued yesterday, to better align our activities and realize our potential through focusing on our more mature portfolio companies. As such, we have decided to suspend establishing new portfolio companies beginning in 2023. We have reduced our staff accordingly, and altogether, this cut will cut our operating expenses by approximately $2 million in 2023, compared with 2021. Operating expenses, net of the expenses incurred by our consolidated portfolio companies and of grants received. The resources saved, not only monetary, but also in time and focus, will be directed to our current portfolio to maximize their potential. The pandemic and the last year developments have highlighted that more than ever, our health and our food are essential systems in which the world must invest to ensure well-being and quality of life for all. Our portfolio companies address these needs. They are urgent today and will continue to be urgent tomorrow. We are fully committed to our investment focus in the health and food sectors to significantly impact lives and while building increasing value for our stakeholders.
Thank you, Todd, Steve, and Chaim. To remind our listeners to submit a question using the question and answer function in the conference call. We'll now move on to answer a few questions that we received prior to the call today. The first one is, how is management increasing shareholder value?
Well, thank you for the question. Of course, we are constantly working with our portfolio companies to help them succeed, and through that success, build value for our shareholders. And as we announced yesterday, we've shifted our company strategy from starting new companies, which creates a lot of value, but takes a long time to realize, to focusing on our existing companies. We believe that this focus, together with our maturing portfolio, could result in significant exit activity in the coming years. And this is the main thing that we think can build shareholder value.
Thank you, Steve. The next question is, shares were sold at 12 cents per share on a private placement. However, shares are now trading close to 9 cents. Could management advise what steps are being taken to address the collapse of the share price?
Sure, let's kind of unpack the question a little bit. There are really a few issues in there. First of all, worthy of pointing out is that indeed, when the PIPE was done, which is now, it was closed at the beginning of this year. We did the first of the 4 tranches that Chaim has suggested, and there are another 4 tranches left that will close out a total of US $15 million round there. And indeed, those shares were offered and sold at 12 cents per share. Now, let's note that at the time we were trading at about around 10 cents per share when that was closed. That's, I think, a really interesting note all by itself. When we engaged in conversations with these potential investors, we proposed 12 cents, and we did so based on the fact that we feel, as you've often heard us say, that Trendlines is a terribly undervalued stock. Interesting to note that these investors simply accepted this and agreed to participate at the 12-cent price, although they could have gone into the market and bought at least some of the shares at a 10-cent price. So that's really an important part of the story. So in fact, we're somewhere 9 point something last I looked. So we are indeed trading a bit under the then 10 cents that we were trading at when the agreement was done. Now, in terms of how we're relating to this today, Steve spoke to this with, I think, maybe the most important comment today. And I would sum it up in a single word, which is focus. Today and for the future, you'll see us laser focused on the current portfolio, on building those companies, funding those companies, managing those companies so as to bring value and as investors to move us toward exit. Now, finally, of course, we all understand, but it's only right to say out loud that there are certain factors that we have no control over. The market has been unusual over these recent months and years. We've seen certain stocks on the biotech side collapse, losing 85 or 90% of their value, while the trendline stock, as with many medical device companies, although much more mature medical device companies, has performed reasonably against the world of the medical device community and has performed incredibly well if we take a look at biotech in general. So we will continue to be focused on the factors that we can control, which is where we're putting our time, our energy, and our capital. And we'll continue to deal with the public markets and move our companies toward exit with strong focus.
Thank you, Todd. The next question is, could management advise if they are open to making open market purchases of the shares since they are considered at a depressed level?
This is something that is under active discussion, and we'll make an announcement if and when appropriate. We have to remember that in purchasing shares, management needs to be careful to structure the purchase and the timing of that purchase so that we are not accused of trading on inside information that the public does not have, and that's an issue that we're looking at. So it's something that we are looking at actively.
Okay, thank you, Steve. The next question is, could you please advise how management is engaging institutional investors to take up a stake in the company?
So let's go back to the PIPE that was recently done. And let's take note of the investors in the PIPE. This is all public information you can find on the website. CBG, Agriline, Vincent Chengiz, the controlling owner of those entities and our controlling shareholder, took a big chunk of the PIPE, along with 3 US-based investors. All of these investors are extremely sophisticated investors, investing in many areas and in many locations around the world. We are proud and pleased to have them, some who have joined us in multiple investments, all of whom are invested in some of our portfolio companies directly, some in more companies than others. These are sophisticated investors, and we continue to court investors like this for Trendlines and for our portfolio companies. We also continue to work with bankers and with the institutional market and with our investor relations firm to get us in front of investors, to continue to tell our story so that we can be better understood in the market. And we hope with this, you'll see additional investors joining us. When we review our shareholders list, we're very pleased to see that in addition to the new investor, in addition to the PIPE investors whom I've just mentioned, is that we've had a number of investors join us over the course of the last year or two, including some of whom are Singapore-based, who have taken meaningful positions in trend lines. So we see a good trend here. We see a stronger base among our shareholders, and we will continue to work with those investors, tell our story to them, and we hope to continue to add additional strong investors to our portfolio of investors.
Thank you, Todd. The next question goes to how many new companies has Trendlines invested or incubated in 2022 so far, and how does that compare to the average of previous years?
Shira, we will have started 5 new companies in 2022, which is a fairly typical year for us in terms of new starts. Of course, as we've already said, we've decided to suspend new company creation in 2023 in order to focus on our existing portfolio companies. This is a decision not taken lightly since we enjoy starting new companies. We believe that over time it creates an important pipeline for us and builds a lot of value. And when we start those companies, we get big stakes in them for very small investments. One of the things that has characterized new companies that we've been starting recently is that in some cases we have strategic investors in those companies from day one. Just several weeks ago, 2 or 3 weeks ago, we issued an announcement that we had started a new company called Celeste Bio, together with Mondelez, the global food and chocolate giant. We're very excited about that company. But despite that, and despite the excitement that starting new companies creates within the organization, we're really focused now on working with our existing portfolio companies to build them up.
Okay, so I'm going to piggyback on one of the questions submitted in the Q&A as it relates to new companies. And one of the questions asked, why now are we pivoting? What made the change this year in terms of deciding on not investing in new companies from next year?
It's a good follow-on question, and I think we've referred to the answer several times in the call. Our portfolio today is more mature than it's ever been. If you go back 3 or 4 years ago, in a given year, our portfolio companies as a whole were raising $20 or $30 million in follow-on capital. Last year, or say in 2020, we raised $43 million in follow-on capital. In 2021, we raised $77 million in follow-on capital. This year so far, our companies have raised $80 million in capital, and I expect them to get to close to $100 million by the end of the year. That increased raise size indicates that the companies are more advanced, they're bigger, they're more mature, and they're getting closer to exit. And as they get closer to exit, we think it's a good time for us to get engaged with helping the companies push to those exits, complete those raises, and create value for our shareholders.
Yeah, I'll just add to that by, and Steve touched on this, I just want to draw out the point, is to remind everyone, is that we are very engaged with our portfolio companies. Our portfolio companies are located in our offices in Israel or Singapore for at least their first 2 to 3 years, often for much longer periods of time. We've actually remodeled our offices more than once to accommodate the needs of growing portfolio companies. We're very engaged. Our business development staff, our finance staff led by Chaim, we're deeply engaged with the companies. We aren't simply showing up for board meetings, but we're involved in the active decision-making. We're involved in the negotiations for raises and for exits. And this allows us to be more focused on those companies and to help bring those companies toward exit. The question as to why today and not previously, I think it's fair to say we see this as a bit of an evolution. It's a conversation that we've been engaged in with the board for some time, and it's a decision now that's taken. And we move forward with this focus on current portfolio.
Thank you both. In the recent announcement regarding investments by Trendlines and AgriLine, what are the factors considered for whether a SAFE or a SPA is more appropriate? Chaim, maybe you want to.
Actually, if I may, I'm going to jump in. And actually, I think I'm going to give part of an answer and leave it for Steve to give the other part of the answer. But first, the terms we're using, just since I think not everyone's all that familiar. An SPA, share purchase agreement, is, while it can be anything, it's generally thought of as just a straightforward investment into a portfolio, into a company, and that deal is often priced. It sets a specific value for the company. There's an infinite number of varieties of how you can structure an SPA. The SAFE, which means a simple agreement for future equity, is a relatively new instrument started in the US, invented by the guys at Y Combinator in California, not even 10 years ago. But it's become a very popular instrument across North America and especially in Israel for a whole variety of reasons. But once again, a SAFE isn't one thing. There are different flavors of SAFEs. We feel that we've taken really good advantage of this, and Steve's going to give a bit of an explanation as to how and why. But simple agreement for future equity, I will tell you that one of its greatest advantages is that it is simple, it is short, and it makes for a less time-consuming and less expensive financial instrument for providing capital to a company.
Typically, safes are used in smaller investment rounds that are believed to be leading up to a larger round, where you don't want to set a share price because you want the investor in the large round to set a price. For example, if we have a portfolio company that expects to be receiving FDA approval in the next 90 days, but needs to raise some bridge funding today, they'll probably do it as a SAFE. The bridge funding is a SAFE because they believe that after they receive the FDA clearance, their valuation will go up significantly and they'll be able to raise capital through a share purchase agreement, an SPA, at a much higher valuation. So that's the thinking in terms of when SAFEs are used by our companies as opposed to SPAs. Specifically regarding AgriLine and Trendlines, because AgriLine is a part of the Consensus Business Group of Vincent Changiz, it's considered part of our controlling shareholder group. When AgriLine invests in portfolio companies and there is no lead investor in that round, then we do the round as a SAFE in order not to price it, because we don't believe that good governance should enable our controlling shareholder to price an investment round. When there's a lead investor, a third-party lead investor, who's leading the round, who negotiates the valuation, sets the terms, then AgriLine is able to join that round through the share purchase agreement. And that really explains why in some of the investments that AgriLine has made with us, it was through a SAFE, whereas in others, it was through a share purchase agreement.
Thank you. Okay, we have one more question that came in through the Q&A. I'm not sure that I absolutely understand what the listener meant, but are there co-investment opportunities?
Yes, that's easy. And actually, we've alluded to this during the course of our talk this morning. We've mentioned that all four of the investors in our recent financing for Trendlines have also invested directly into portfolio companies. This is very common for us that shareholders in the Trendlines group participate in investment rounds in our portfolio companies. I would encourage anyone who's interested in a particular company or just really wants to talk in general about opportunities to be in contact with Steve or myself. We welcome that. We feel it's an important part of what we offer to our shareholders, is this opportunity to look inside our companies and to participate in investing in our companies.
In fact, if you take a look at our website on the portfolio page, many of the companies actually have a title on them that says now funding. So we're very interested in attracting, we're very interested in attracting a co-investment.
Okay, thank you. Now I understand the question. Sorry. Last question for today. What are the company's intentions with regards to the Orthopediatrics shares?
So as an investment company, we do not see ourselves as long-term holders. We have received shares twice in the ApiFix exit. The first group of shares was sold by us after we came off the lockup, which was a 6-month lockup. And over a period of time, we sold out that holding. The current tranche of shares that was received from Orthopediatrics is now off lockup. And we continue to watch the market so as to make what we hope will be good decisions as to if and when to dispose of those shares and bring that cash into our bank accounts to make it available for investments in other companies.
Thank you, everyone, for listening. And we're always welcome to receive questions and clarifications. You can send them to me, Shira, at trendlines.com. And we thank you all for being with us today. Bye.
Thanks, everyone.
everyone.
Bye-bye.
Hello.
You feel like one that we are practicing?
It is.